Well, I think regulators are stepping in because they want to make sure that when investors want to trade, that somehow the brokerages are going to allow them to trade. And remember, investors really want to trade when they think that prices are going to go higher and higher and higher. So if you get restricted and you're not able to trade as the stock is going up, there's a problem with the underlying product. And that's why I think that regulators want to basically look at this a little bit more closely.
So then what role should regulators have when it comes to short selling practices or some of these investors driving up prices, since it's meant to be a free market?
Well, I think that regulators have to make sure that these brokerages provide all the information and that the investors are aware of what they're investing in. For example, investing in zombie companies may be a winning proposition over the near term, but over the long term, it is not. So it is up to these brokerages to really educate their clients. But on the other hand, they want to make sure that these brokerages have the funds that they have to deposit with the clearinghouses. And that could mean ability to raise capital, extensive credit lines, all those things, so that they don't have to shut down the ability of traders to be able to have transactions precisely when they want to trade the most. Because otherwise, that is going to undermine confidence on the part of investors, and I don't think any regulator wants to see that in any market.
And obviously, we did hear that last guest talking about the sort of the gamification of apps like Robinhood that does make it more accessible to regular retail investors. So when all this is said and done, who is left feeling the bulk of the economic pain at the end of all this?
Well, I think clearly that the underlying pain is going to be left by the people that got in too late. And those people that wanted to get in and ride the wave and they couldn't, they're also going to be upset because they think other people made money. But by and large, usually the people that lose are the people that got into the game when it was a little bit too late, and then they have to ride it back down. That's never a good thing.
And we've certainly seen a lot of the stocks, whether it was GameStop, AMC, BlackBerry, taking hits. How should some of these companies that are involved really react to all this?
Well, these companies have to realize that when they see their stocks going up way above their fundamental values, they probably should take advantage and start to raise money. And by the way, if it's a good company, they do that. Take a company like Tesla. Tesla really capitalized on the fact that the company's stock was going higher and higher. They took the capital to make the company even stronger, and that's good for investors. Even a company like AMC, people say the fundamentals can't justify the prices. But again, if they raise more money and they make the company a lot stronger, it sort of becomes a self-fulfilling prophecy. There's a chance for the company to get a second chance.
So because there has been this spotlight because of these Reddit investors, do you expect to see any sort of longer term or fundamental changes to addressing short selling by the SEC?
Yes, I really think that the SEC is going to investigate to see what they can do in order to make sure that investors that want to invest don't get shut out. That means being able to get more money quicker and certainly to minimize those trading disruptions, because remember, when prices are going down, investors want to get out, and when prices are going up, they want to get in. And to have a free market and that doesn't undermine confidence, you have to make sure that there are as few restrictions as possible. And I think the regulators want to make sure that that is the case at all times.
And what about confidence in the trading platforms themselves? What about Robinhood? How does that firm really recover from this, especially since they're planning to have an IPO soon?
It's going to be a little bit of a problem because remember that right now there's a lot of anger among a lot of Robinhood clients. Many of them are moving to other companies. And so if you have an IPO coming up and you all of a sudden see that some people in your company are moving to other competitors, that doesn't enhance the value of the business from a longer term perspective. So there's no question in my mind that this does very little to enhance the value of the future IPO. So for Robinhood, I think they're doing the right thing. They're trying to raise more money. They themselves are trying to minimize the probability that this sort of stuff continues to happen in the future, because that's going to hurt the value of their business over the long term. And I know for a fact that no company wants to see that happen.
And just very quickly, a lot of people, when they hear short selling, they think of the 2008-2009 financial crisis. Are there any correlations between the current pace of short selling we're seeing and that crisis?
Well, I think the best analogies that I can see is that back in 2008, 2009, a lot of average people were very upset. They felt that the average person got the short stick. They lost houses and things like that. And now they feel that the small investors did not get an opportunity to make as much money as the short sellers. And remember, when you restrict the ability to buy, that means the stock doesn't go up as much. And so all those much wealthier short sellers don't get hurt as much. So again, the average person trying to invest feel that they got the short drift the same way they felt they got the short drift back in the time of the global financial crisis. But so far, we don't see a real financial crisis in our financial markets today, as we saw during the global financial crisis. So the parallels are not exactly, but
Right.
the sentiment and the anger is pretty similar.